Hey guys, I just want to make a quick update on our entry and exit strategy, mainly the expanded flat. Okay, because we've been getting some fake moves in the past month, so I just want to correct that. Okay, let's say we get a 5 wave move. Okay, it doesn't matter on which degree we are getting that move, but I just want to focus on the corrective structure part. Okay, let's say we have this 5 wave move. The entire move can be wave one, or it can wave one, three, or five. Okay, but as soon as you start getting a corrective structure, let's say we get this expanded flat. Okay, so I expanded flat. Okay, let me first draw it on its own. Okay, expanded flat is when wave C is above wave A. Okay, so this can cause a bit of a confusion when you want to take your trade, because as soon as C breaks the level of A, it looks like it's creating higher highs. Like this is a new high after this move. Okay, let me put that there, because usually when you start drawing your trend line, it joins from wave four. Okay, let's say your trend line joins from wave four like this. Okay, but not necessarily wave four. There can be any small wave within wave five, and then you have your expanded flats looking like this. Okay, and according to our current entry strategy, I say you should take your entry when the market breaks this trend line, your inner trend line, which is usually blue. Let me make these two yellow. Okay, so when it breaks this trend line, that is when I say you can take your entry. Okay, and then your stop loss will be outside your trend line. Okay, so what I want to change, as much as this gives a really nice entry, okay, it's a nice entry, but I've realized there's more risk to it. Okay, so let's say you get a red candlestick and it closes, the 1 hour closes below this trend line. You then take your entry, but because it has broken this level. This level is now support. It's possible that this um, was starting a new trend. Okay, so if you take this trade, it will go straight to your stop loss. But sometimes it can be a true expanded flat. So to avoid that, we are going to take later entries. So we will not be taking our sales above wave A. Okay, our new entries will be somewhere here. So we'll just allow the market to start dropping. Okay, if it drops nicely, you can just check the momentum, and then it makes a correction in the zone, and then you take that breakout. Okay, because since this is now support, usually it will make another corrective, a small corrective structure before it drops. Okay, so our new entry will be here. And then in terms of the stop loss, we can just look at the strength of this zone. Okay, if you check in the past and it's been behaving as a strong zone, okay, we can just take this as a fake breakout of that zone and have our stop loss above the zone. Okay, so our risk reward is not affected, even though, okay, when we were taking our entries from the stop loss outside, okay, and now our stop loss has to be above the zone. Okay. But if the risk reward still allows, you can keep it above the trend line also, because we are catching this move, which is usually a large move. So when it breaks from there, you still have a good trade. Okay. So in any degree, this can just be your wave 1, 2, and then if it's wave 3, if this move happens to be wave 3, then you have even a better risk reward. Okay, but in a case where it's wave 1 or it's wave 5, just watch your risk reward. Okay, that's all for now.